Welcome to Explain the Charts. Today, October 23rd, we're diving into the world of XAUUSD, gold, analyzing the latest news and market sentiment to understand where the price is headed. Is the recent bull run finally coming to an end, or are there more gains to be had? We'll examine key indicators like trends, reversals, support and resistance levels, and potential correlations between news events and chart data. Join us to discover what price levels are crucial to watch and determine whether the short-term and long-term outlooks are bullish or bearish. Let's break down the charts and find out where the gold market is headed. First, let's take a look at the headlines and current events affecting the XAUUSD pair. Gold prices have been on a tear in recent weeks, hitting record highs driven by a combination of factors. The global economic outlook remains uncertain, with fears of recession lingering and inflation still stubbornly high. This has led investors to seek safe haven assets like gold, driving up demand and pushing prices higher. However, there are also some headwinds facing gold. The US dollar has recently shown strength, making it more expensive for investors holding other currencies to purchase gold. Rising interest rates are also a concern, as they increase the opportunity cost of holding non-yielding assets like gold. The Fed's recent hawkish stance on interest rates suggests that further rate hikes are possible. This could put downward pressure on gold prices, as investors may shift their focus away from precious metals towards higher-yielding assets. The geopolitical landscape also continues to be volatile. The Israel-Hamas conflict in 2023 has added to the sense of global uncertainty, and the potential for escalation in the Middle East remains a risk. While gold is often seen as a safe haven asset during times of geopolitical instability, the recent surge in prices may be driven by speculative buying rather than genuine safe haven demand. Now, let's transition to the charts and see what the technical indicators tell us about the future direction of XAUUSD. Here on the daily chart, we can see a clear upward trend in gold prices over the past few months. The price has broken through several resistance levels, suggesting that the bullish momentum remains strong. However, the recent rally has been quite sharp, and it's possible that a correction is in order. We can see a potential resistance level forming around the $2,750 mark, where the price has stalled in recent days. If the price fails to break through this level, it could signal a short-term reversal, with the price potentially pulling back towards the $2,700 support level. It's important to note that this is just a potential scenario and the market can be unpredictable. Looking at the bigger picture, the long-term outlook for gold remains bullish. The fundamentals remain supportive, with global economic uncertainty and inflation providing tailwinds for the precious metal. However, the short-term outlook is more uncertain. The US dollar's recent strength and potential further interest rate hikes from the Fed are key factors to watch. Let's now zoom in on the hourly chart to get a better sense of the current price action. The hourly chart offers a more granular view of the recent price action. We can see that the price has been trading in a range for the past few days, suggesting a period of consolidation. The price has been testing the $2,750 resistance level, but has failed to break through decisively. This suggests that the bulls are losing momentum, and the price may be poised for a pullback. We can also see some bearish signals on the hourly chart. The Relative Strength Index, RSI, is approaching overbought territory, indicating that the price may be due for a correction. The MACD indicator is also starting to turn bearish, further suggesting that the price action may shift towards the downside. If the price falls below the $2,700 support level, it could signal a more significant decline, with the price potentially testing the $2,650 mark. However, if the price manages to break through the $2,750 resistance level, it could signal a continuation of the bullish trend. To gain further insights into the current market sentiment, we can examine the 15-minute chart. Now, let's shift to the 15-minute chart where we can observe the most recent price movements. This time frame provides a real-time perspective on market sentiment and volatility. Here, we can see that the price has been fluctuating within a relatively tight range, indicating a lack of strong directional momentum. The recent price action suggests that traders are hesitant to take large positions, potentially due to the uncertainty surrounding global economic conditions and geopolitical risks. While we can see brief spikes in price, these are likely short-term fluctuations driven by speculative trading. The overall lack of strong directional momentum suggests that the market is currently in a state of wait and see. To better understand the short-term outlook, we can observe specific ranges of candles. Let's look at the recent trading session, from around 17 to 2200 hours Universal Time Coordinated. We can see that the price has been consolidating around the $2,720 level, testing both the $2,725 resistance and $2,715 support levels. This sideways movement reinforces the idea that traders are currently unsure of the direction of the market. This lack of clear direction suggests that the price action may remain volatile in the short term. In conclusion, the news and chart data suggest a mixed outlook for XAUUSD. The long-term outlook remains bullish, with global economic uncertainty and inflation providing tailwinds for gold. However, the short-term outlook is more uncertain. The US dollar's recent strength and potential further interest rate hikes from the Fed are key factors to watch. The price action has been consolidating in recent days, with the price hovering around the $2,750 resistance level. If the price breaks through this level, it could signal a continuation of the bullish trend. However, if the price fails to break through and falls below the $2,700 support level, it could signal a more significant decline. The hourly and 15-minute charts also indicate a lack of strong directional momentum, suggesting that the price action may remain volatile in the short term. Key price levels to watch include the $2,750 resistance level, the $2,700 support level, and the $2,650 potential downside target. The likelihood of the price breaking through the $2,750 level and continuing the bullish trend would be reinforced by a weaker US dollar, a more dovish stance from the Fed, and a decrease in global geopolitical tensions. Conversely, the likelihood of the price pulling back and potentially testing the $2,650 level would be strengthened by a stronger US dollar, further interest rate hikes from the Fed, and an escalation of global geopolitical tensions. It's important to remember that the market can be unpredictable, and these are just potential scenarios. Traders should closely monitor the news, economic indicators, and chart data to make informed trading decisions.